Who would have thought the end of the world is just weeks away as Greece heads for a default? The crisis drags on, but attention spans being what they are these days, it appears traders have temporarily lost interest. Investors focused on the better US economic news and the fact that its central bank isn't in too much of a hurry to put up interest rates. The Shanghai market is an exception. It suffered a correction after the biggest weekly loss since the GFC. Regulators have cracked down on margin lending, and all that talk about bubbles is starting to resonate because Shanghai is up 130% in a year. Here it was a case of bargain hunters moving in, reversing yesterday's falls. Shares were up across the board. Greece wasn't the only issue ignored by the markets. The US House of Representatives approved fast-track legislation central to the Trans-Pacific Partnership. So that means the massive deal involving 40% of the world's economy is still alive. Also on life support are the Greek banks. These four banks make up 91% of the country's banking assets. Provisions for bad loans are mounting. 3 of the 4 banks have potential provisions bigger than tangible capital. It gets worse. More than half the capital is made up of tax credits used to reduce tax on profits. And then, of course, the government has to have cash to pay a refund. It's pretty clear that a future Greek bailout, if it happens, will need to include extra money for the banks. Now to something of value. The Australian dollar is generally weaker, but it's still well above 77 US cents, and that's finance.